Hey, what's up everyone? Welcome into the channel. My name is Brett with Investing on the Go. Today we're going to be talking about an option execution that took place today where I had an accident, but I was able to turn it into something positive. We did sell an option like we had previously said in our video. This is something I wanted to do going into Monday. So we're going to go ahead and cover where I sold at. I did rebuy it, getting some profits. Then I bought to open, which was an accident. So I'll go ahead and cover how I was able to fix that mistake, and then where I adjusted my sell to open after the market began to kind of settle through the midday. Okay, so with that said, if you guys are brand new here to the channel, I would really appreciate if you go down below, smash that subscribe, smash that thumbs up if you guys enjoy all the videos and such. And let's go ahead and dive into the video. So over the weekend in our last video, I had discussed how I wanted to wake up a little bit earlier this morning on Monday due to that gap that took place on Thursday into Friday. On Thursday, the S&P 500 closed at 750. It opened up on Friday at 742. So we had that gap down that took place between Thursday and Friday. So I assumed going into this weekend or Monday that we would probably come back up and retest that 748. So I was waiting for that this morning, set my alarm, got up, and guess what happened this morning? We opened up right around 747. We creeped up all the way up to 748.73. And right in this time frame at open, that's when I was ready to strike. I knew we weren't ready to break above that resistance at 748, 750. We have a pretty good amount of resistance going on right now with the market uncertainty. There was some news floated out today from Iran, US, that there'll be some sort of a 10-day ceasefire. But even though that got floated out pretty early on, the market still continued to sell off into close. We'll take a look at the activity and we'll kind of break it down, as it happened today. So here's all that took place today on the 20th of July. So first thing that took place in the morning, we set our sights at a strike of 748. We sold our contract. So what happened over the weekend? I was assigned 100 shares of SPY at a price of $748. So with the morning open, we sold a call option. So this, if the market does happen to go above 748 and continue going high, we're obligated, or we can sell our shares at 748. We kind of have to, unless we want to buy back that option, and then that costs some money. But we were able to sell at 748, which was refilling this gap that took place on Thursday. And then once the market began to kind of sell off in through this early morning, it did hit 743 before bouncing. That is when we went ahead and said, okay, we found that top, we found kind of a midday bottom. So I did go ahead, and at that time, we had sold our call option at $4.61 per share. So multiply that by 100 shares. We were able to collect a premium of $460.34. Now, as the day progressed, I did and was able to close that option a little bit sooner. So I was able to buy to close that same option at 748. I did pay $2.70 to close this. As of today, it is a little bit cheaper to close. We'll go ahead and cover that right now. So if you guys are over at Fidelity and looking for doing something very similar, you can go in here, go into your news and research, select options, open this up, and inside of your option analysis to check out what the prices are, select your option chain, and then head over into your left-hand side, type in your ticker symbol. So in this case, we're looking at SPY, and we are looking at call options, and we want the charts. Chart options, calls, expiration. We have our expiration on the 24th at a strike price of 748. And here we can see what that option is worth right now. So right now, as of close on Monday, that option is worth $2.20. So right up in here, let's go ahead and look at the 1 day. We were able to take advantage of, you can see right back here, we sold our option for $4.60. So right, let me see, where is it at? Okay, so we must have sold it probably right around this early morning time. Look at our sell to open. It should give us a time in here. So 9:30 and 34 cents. So essentially at 6:30 in the morning, right as the market opened, I was on my phone and executing that option. So if we head back over here, I was able to get that $4.60 per option and netted me $460. As the day progressed, I went back to sleep, got some Z's, and then woke up a bit later to take a look at where the market was at. Here we are a little bit later. The market had trended down. That call had become less expensive. Buy back that option, so we'll buy it to close it out. We've collected about 40% of the premium. So we went ahead and set a sell to open or buy to close here at 230, and I wasn't sure if it would actually execute. So I did end up bumping it up to 270. So essentially I increased my, this was 50%. I always open my contract and then I set a buy to close at 50% profit. So if throughout the day there's volatility and it drags it down and I'm able to collect 50% of the premium for just a few hours, I'll go ahead and do that. So I did that early in the morning and just fell back asleep. And then later on in the day, I woke up, I was like, okay, well, it's not coming down to my strike price, but the market seems to want to stay in the lower half of the 740s range versus, retest that 748 range. So bears are kind of in control right now. So I did end up buying to close and closing it out at 270 and looking for the next opportunity because the S&P 500 I feel is going to have some volatility, uncertainty, and be less resilient. 50-50 chance, is it going to break above 748 this week? It's looking very unlikely. Even with a ceasefire taking place, even today we did see some new strikes kind of going on. So I don't know if that'll actually be taking place. So I went ahead and adjusted down my strike. Here's where I made the mistake. So when I went to sell my option, for whatever reason, I didn't check that the action in here was set to sell to open and it was set to buy to open. So when I executed this next one right in here, I bought to open. So what this did instead is instead of giving me a premium, you can see right in here, or you can see my exchanges right in through here. So this morning I was able to net $460.34. I paid $270.66 to close that position out. Then when I bought to open the S&P 500, I paid $433.66 for the option to buy at 744 if the price continued to move higher. Break beyond 744, I could buy 100 shares at of the S&P 500. Say it was now priced at 748, I would have the option to buy 100 shares at 744 and net that $4 by 100 share difference. But in this case, that wasn't what I wanted to do. I didn't want to have an additional 100 shares to my already 100 shares of SPY. I was able to sell to close the S&P 500 here. Same thing, 100 on the 744 strike, and I was able to get $444.34. So hey, this was good. I was able to walk away with $10 more than I paid. I paid $433. I was able to get $444 back, and then I went ahead and initiated my final of the day, my final option of the day, which was selling to open because I own already 100 shares. I wanted to list these as, I have the option to sell them at 744, but I'm able to collect a premium. So here in this case, I'm able to collect $455.34 up front. If the share price does happen to go above 744, which, it could by the end of the week, but I'm guessing more than likely, if you were to look at the market right now and see, is there right now we're stuck in this downtrend once again. And while we were able to break out of it early morning, the reason we broke out of it was we refilled the gap, which we needed to refill. And we also had some news got floated out that Iran would like to make an agreement again. We had some discussions. I know in the Discord server, some people were kind of posting that, look at that, right before the market opens, there's some news floated out that we're looking for a 10-day ceasefire. But I think because of where we're at right now with the uncertainty, we saw gas prices. I know within just the last week, gas prices here are over 25 cents difference. I believe there's some new news out there. Well, we have roughly 34 days of crude oil supplies as well. So we have so many tiny little factors that are playing into everything that's kind of going on. And if we're just looking at the market, are we more likely to break above 748 on some news and continue moving higher? Or are we more likely to continue downtrending into this week? And for me, I do believe that we're more likely for us to continue downtrending towards 740. If we do happen to break 740 and continue trending lower, that's okay. With the premium that we were able to collect upfront from the prior sells, buys, and sells, we do end up with a good amount of options. So if we head over to where I'm kind of keeping all of this at, so we can see right in through here, here's my sell to open this morning, $460.34. There's my close. I closed it at 270. We were able to get a net profit there of $190.34. There's my accidental buy to open, my third option play right here. I bought to open. I paid $433.66 for that option, and then I was able to close it there for $445. So I collected a difference of $11.34, and then we were able to sell to open our fourth contract there at $455, collecting $455.34 in premium. So as of now, we've collected is this the last day? Yeah, as of today, we were able to lock in $657.02 of premium for today to help cushion the downwards movement. If the market does continue to sell off, I'm trying to see here, our break even point, if the floor continues to fall down, our break even point is $734.41 that the market would have to come down to. So that's well above our support levels at 740, and there's some support levels right around 734, 737 range as well. So if the market does continue to sell off, I'll be able to cushion that and absorb it. And then we do have some additional capital on hand that if the market does pull back below 740, where I had previously I bought at 740.25 and I liquidated those shares, we still have around $30,000 or so of equity that I could inject into the market in the 730 range, or continue doing the option play of selling, continuing to take premium and selling new options of where I do see the market moving down to. But we'll see. We'll play it day by day. Right now, I do have my call option open at 744, expiring on Friday. It's got today's gains $134 right now, so I could close it, make $137 on it as of now. But I'm gonna go ahead and sit on it. I'll wait till tomorrow. Right now, overnight, the market is higher, but I don't think we're gonna continue to hold this. I think we'll probably end up coming back down into the 739, 740 range and retesting this low before we retest that 748, 746 to 748 range. So that's it. That's how we were able to execute some options today, fix a mistake that we did, but still collect some additional premium on the side. And we're setting a bottom. So we have a threshold on a bottom of 734 where we'd still be net positive, because right now my goal on my Fidelity side is to maintain the equity in the account while still being invested, right? So guys, that is going to be it from me. I do appreciate everyone for tuning in and hanging out. If you guys have any questions or comments, definitely drop them into the comment section below. Did you guys buy or sell anything today? I will more than likely be waiting a bit till maybe Wednesday, Thursday, if the market does fall below 740, to begin buying over on my Robinhood side. So guys, that's going to be it from me. Thank you all for tuning in. I'll catch you guys in the next one. Bye-bye.